Hey, everybody. Okay, so the topic that we're discussing is from payment to profit and how PayFi is redefining finance. And we had a little briefing just before we did this, and it was really interesting to me because when I was speaking to and Husam and Shay and Stuart, and these guys will introduce themselves, they said, "Guy, we don't often use this term PayFi," and it really did make me think. And I thought, oh, blimey, I use it so much, and we're using it so much in and around Token 2049, but what does that really mean? And for me, it means the convergence of payments and payment technology with decentralized finance. But it made me think that there's actually a lot to unpack, and maybe we've got further than we think to go, particularly with the larger institutions, in terms of what this area potentially is. So anyway, we've got a bit of time. We've got around 20, 25 minutes. So I would love for the panelists to introduce themselves. Maybe we'll start with you, Husam. I'll pass you over the mic.
Thank you so much. So good afternoon, everyone, and thank you so much for this vibrant and live audience. My name is Husam Habannake. I lead crypto and digital assets product commercialization for Mastercard in the Eastern Europe, Middle East, and Africa region. I have been in Dubai for nearly 20 years now. It's been a while. I have worked with a number of institutions, including the Central Bank of the UAE, other card schemes, a number of local or regional banks and technology companies. And with that, I will pass on to you.
Flip it.
Hello.
There we go.
Oh, wonderful. Hey guys, my name's Che. I am visiting here from San Francisco. So small little 16-hour trip. Thank you though for inviting me on this panel. Very honored. I come from Worldpay. I've been at Worldpay now for 12 years. For those that don't know what Worldpay is or what we do, we're the largest global payments processor. So that's credit and debit cards. So we're basically a fiat on-ramp, off-ramp for every vertical that involves a card. We process well over $2.5 trillion worth of volume a year. And so I personally run our crypto team, which comprises of about 30 people. And so we go out there, and most of our clients that we talk to at the moment are exchanges, on-rampers, wallets, and we are now starting to move into this world where we're finding partners like Vanar to do some other things in this space.
Awesome. And Stuart?
That's great. Thanks, Shay. So I'm Stuart Eisted. Been in electronic payments for about 35 years. So if we could come up with some new terms for me to try and learn, that would be great as well. Having worked in retail banking, in the payment schemes, in processing, previously MD for crypto.com. I've been in Dubai, like Husam, for 21 years. And I'm the CEO of a company called Paytech. And Paytech is, we call it a 6-100 company. So we've been going for 6 months, but we've got 100 years of electronic payments experience. And we work in really 4 key verticals: merchant acquiring, fintech card issuing, real-world asset tokenization, and we help customers with their alternate payment conversion, so crypto into fiat, and all through partnerships with fully regulated license entities, ensuring that the trust and security stays within every transaction.
Awesome. I mean, even from my perspective, being in the space since 2019, or 2017 actually, sharing a platform, sharing a stage with companies with that breadth of experience and this size customer base is unheard of. So that speaks volumes about where we're going and where we're headed. But I think where we need to really begin is to understand that every major leap in finance comes with, with winners and losers, people that might be left behind. And I think what I would love to discuss is what strategic shift is PayFi going to make? Who stands to lose the most? What are the big challenges and big things that we envision? We all remember, some of us who reveal our age remember VHS and Betamax and, you know, all these different technologies that were said to be better, but they fell by the wayside, and that happens to companies as well. I mean, BlackBerry was huge 5 years ago, and now where are they? So I'd love to explore that. Maybe we start with you, Husam, that, you know, who are the winners and losers going to be out of this, and what changes are coming?
Thank you. I believe just looking back at history, we don't have to have absolute losers. When the car was invented, horses did not lose. They enjoying their life in the fields. When we invented the mobile phone, the old phones did not lose, just retired. Same thing with the internet. We just saved more paper, more trees. I believe the loser here is inefficiencies and overhead. The losers will be the people who, or entities that refuse or resist to evolve and adopt. I think we don't have to have losers in the sense of complete or as a zero-sum game. If you evolve and adopt the technology, if you reinvent yourself, then avoid being resistant to change, all of us can emerge out of this winners.
That's a great answer. I could just say ditto on that, but I would add like a few things. First, I do think that, to your point, Husam, there's not full winners or losers. There's going to be people or companies that are forging ahead much faster than others, right? I think I've been in this space for 12 years at Worldpay, and I think one of the things we noticed very quickly is that this was obviously a disruptive technology. It was disrupting a payment structure that was put in place back in the 70s, et cetera. So, you had a lot of, whether it was banks, whether it was, other providers, or, even other financial institutions. I don't think anyone obviously takes it serious at the beginning. And those that did see that this was going to change, I think, were the ones that got ahead of a lot of this and started investing resources into the space. So for example, with Worldpay, building this team out, making sure that we had experts in all of the different department stakeholders that have to approve a customer coming on board with us. So having the right legal teams, having the right, like compliance teams and what have you that could actually go through these things helped us get ahead of a lot of stuff and bring customers on. And I think other traditional finance institutions, if they're taking that same approach, then what they're trying to do is be a part of the disruption and versus being disrupted. And I think that's, for the TradFi side, that's your winners and losers. I think on the crypto side of the fence, there's also winners and losers there, obviously, because there's all types of chains coming up, all types of projects, and we don't know where the adoption's going to go. And I think the ones that could end up being the losers there are the ones that create great technology and they expect the customers to come to it versus realizing that they've got to bring the technology to the customers. Absolutely. To have them use it, right?
Awesome.
Oh, two great answers. I can't really add a great deal to that. I would just say that I think the way I look at the world is that the institutional-led finance is being taken over by transactional and asset-based ecosystems. So Husam talks about inefficiencies of some of the traditional finance companies. Actually, I'm very interested to hear Matthias talk about personalized data. So the winners, or the people who are going to win more are going to be the companies that really understand their customers and understand how their customers are transacting. When I first started in finance many years ago, you actually went into this thing called a branch and you filled out a form with a pen and you went through this whole process to get financial services. And if you were lucky, they approved you. Now, the decision with technology, the way that we've developed, and really interested to hear about Neutron and some of the products that have been launched today by Vanar, we're taking the decision away from traditional finance and we're putting it in the hands of the consumers. And that's how we're going to really evolve and affect change. And I think that's one of the key areas of difference.
That's really interesting as well, because what comes across from all of you is a consumer-centric approach as well. That there has to be balance, but we have to be cognizant of the new opportunities or areas that this begins to unlock, and also just the sheer scale of a company like Mastercard, and then Worldpay, the volume that you guys deal with, and the type of relationships you have in this space. When we started talking to Worldpay, I was blown away by how much of that you guys manage. Like you're this monster behind the scenes. It's amazing to see, and then to see new companies coming up that have a ton of experience. But I want to stay with you, Stuart, for a second. It's like, when it comes to PayFi, I think it creates new forms of value, new types of opportunities. Like what do you see coming? Not just faster or cheaper payments, but you touched upon like you had to walk into a branch and stuff like that. What do you see as new types of value that can be created through PayFi?
So look, the way I look at it is, you see, everyone talks about crypto, and crypto takes all the headlines, but the heavy lifting is done by the blockchains. The heavy lifting is done by the people who are innovating. So if I look at problem statements, and you're right, I do look at things in a customer-centric approach. Today, if you're in Africa and you need to buy product from China, there's a hell of a process that you've got to go through in the financing of the supply chain before you even get to the supplier to then ship goods, to then receive and come forward. So one of the things that we've done at Paytech is partnered with some organizations that are solving that problem. So rather than using a traditional sort of bank SWIFT network, out of Africa can typically take a few weeks to get corresponding bank and transactions to happen. One of our partners takes local currency, converts into stablecoin. The stablecoin is then converted into local currency, renminbi in China, and then it's then deposited in the account of the supplier. So everybody has to stay and sit within the ecosystem. So you have to open an account with our partner. You have to have your suppliers open an account with our partner. But those transactions can be in instant, so T+1, for example, rather than wait 6 or 7 days for a transaction to happen. So that's how, we talk about speed of transactions, but it's also security and trust. If you're sat in Africa trying to make a transaction with a supplier in China, I'm pretty sure there's some translators that make quite a lot of money on those transactions. But if you've got everything on the blockchain and everything within an ecosystem that you can control as a buyer or a seller, then I think that's going to evolve utilization of things like blockchain and PayFi technology.
I think how do we get new products? It's usually either companies will charge with innovation, will just basically build a product that believes that this product will succeed and then people will adopt it, or the demand will come from customers, a gap will be created in the market, or as a result of a technology revolution, and then companies will start developing new products. And when it comes to our vision, we have, of course, both. We have built products that is solving a real problem, is bridging a real gap, and also we have created products that are a direct result of consumer demand, sometimes consumer, sometimes corporate. Just to give you an example, 2 products. And also is somehow a manifestation of PayFi, where the traditional payment rails have immediately connected and bridged with the digital and tokenized economy. So an example of that is the crypto card, where the crypto card is a traditional payment instrument that is immediately funded by tokenized asset or a crypto or a stable coin. And this is an answer for a problem and a gap in the market where consumers tells me it takes me 4, 5, 6 days to be able to spend from my crypto holdings. I have to go to the exchange, I have to sell the digital assets, I have to wire it into a bank account and then be able to spend. And I have to do that in bulk, and that's expensive. The crypto card comes to simplify and solve this problem, where it allows the consumer to have a card, go to any merchant, spend, and this card can be on their devices, can be tokenized, can be used online, and they can benefit from all the traditional, existing, established compliance and regulatory that we have all been enjoying for years. Another example is the stablecoin support and how we, as a company, answer the demand of our merchants, like we have announced 2 days ago, where we can support stablecoin settlement for merchants. So lots of the merchants that are in the tokenized economy, they would like to stay in digital assets. They would like to unlock higher value of their money, to increase the time value of their money by having it now, not a day later or 2 days later. We would like to have it now, so the potential, the investment potential of their assets is higher. So those are 2 examples, and maybe we can give more examples later. Thank you.
Yeah, and those are great examples. And to expand on the stablecoin one, I know that's the hot topic of this cycle. Again, I've been being in the space so long, every cycle was driven by something, right? NFTs, ICOs, you name it. I think in this case with stablecoins, what we see, what's really important, what's made us go out there and look for partners that will help us do stablecoin settlements for our large merchants, because again, we're not talking about like a sandwich shop, right? You're talking an Amazon or a AliExpress or something. So when you're talking stablecoins there, what we've noticed from different verticals is each one of these verticals had a reason for wanting something like stablecoins. If it was the high-risk sector, say it was crypto, and you're talking about on-rampers or small exchanges, in traditional fiat sectors, they've got to wait for their fiat that happened on Friday to come on Monday. So when the weekend's happening and you've got trading activity and you've got all these things going on, they feel that tight crunch of not getting funds in on time, and you start to see some companies start throttling traffic and things like that because they're worried about not having enough cash to handle things, right? Banking holidays, all of those things. That's a crypto example. We find in other places, like say the marketplaces, the Etsy's of the world, they want to do things like, in examples like pay by crypto or pay-ins, crypto pay-ins, other avenues of accepting funds or paying their creators or, whatever you call the partners that they use for these marketplaces like an Etsy, and to be able to pay them in crypto and receive crypto. That was a big one, right? Same with stable coins, paying in stable coin, receiving in stable coin, especially if you're talking about markets that take a long time to get fiat from point A to point B. And I think that, one last example with the stable coins, look at the travel industry. You have for example, the airlines, they've got, if you're British Airways and you're, got customers around the world trying to buy tickets for British Airways to fly to London, that's FX almost everywhere they're at, right? And so shaving off FX, how do we get rid of that? Ooh, stable coins sounded like a very great thing to explore, right? So these are all examples, and they're not just sitting in the crypto space. They're now all in Web 2, and what's interesting about our world is processing for all of these big Web 2 companies, hearing which ones have thought ahead about this and which ones are still kind of coming in there. So I think with all of these type of products, you've got a lot of growth here coming, and I think it will be driven more by those Web 2 companies versus crypto, or maybe both.
Absolutely. I mean, just getting into the sort of stuff that we're looking to do with you guys as well. I think that the opportunity is vast. There's so many areas that we plan to work together beyond being a validator on the chain. So we're super excited about that. But I wanted to stay on the topic of stable coins. Maybe this is something I'd love to ask you, Stuart, as well. It's like, to Shay's point, it is the hot topic of the time, and it is a driver of the momentum. But what role do you think stable coins are going to play in scaling this entire PayFi sector? With USD1 coming and I think $1 billion have been minted just this week or something. But I'd love to get your thoughts on what you think, and then to the rest of the panelists, what do you think the role is going to be of stable coins in really making this sector being taken seriously?
Yeah, look, I think it comes down to trust and security. I think, as I said earlier, crypto takes all the headlines, whether it's positive or negative. Blockchain's an infrastructure layer, but people are aware and understand the value of stable coins, whoever the provider is. Typically, it's one-for-one backed. It's typically secure, so your transaction, whether you're the send or the receive part, you know what you're going to receive. So I think the role of stablecoin is absolutely pivotal to the success of a lot of projects. So I think trust and security being kind of filtered through the entire ecosystem, I think that's the key for stablecoins.
Thank you so much. So I believe when we're talking about stablecoin here, we're talking about regulated compliant stablecoins, and I believe it's a great invention where we have taken the benefits of the blockchain and open networks, all these technology benefits, and we have immediately deployed it into a use case where it will instantly eliminate inefficiencies from the system. I believe that they have great potentials. Our clients, both consumers and corporates, are basically realizing the benefits of stablecoin, of the speed and transparency that it allows. And then we have observed jurisdictions like the UAE, where the Central Bank of the UAE has issued the payment token regulation 6 months ago, which allows for local currency stablecoin backed by the dirham. And this tells you that the regulators also believe that this is the important piece of the future financial infrastructure that will support and accelerate further the development of economies.
Yeah, and I'll just echo both. I think that when, to really get the adoption and the trust, it's trust, it's security. You hear that with a lot of our customers. But I think it's just like anything else, right? You can be skeptical, what have you, until you use the product. And then once you use the product, you go, wow, did I just send that quickly, right? Did customers just get paid and I skipped 3 corresponding banks along the way that took a cut, right? How do we do more of this? And I think the way we're going to approach it, my team doesn't know this yet, but I'm going to push this on them, is, a lot of it is getting them to, a lot of these customers to try, using this product in just a real small bite-sized format, right? Try 1% of your traffic or something smaller, or one market that might be your costliest market, the one that has all the corresponding banks, or takes 8 days to actually send funds. Try a little bit of that and see where it goes. And what we found is that's usually that catalyst, right? Because at the end of the day, most of these big e-commerce companies are trying to figure out how to save costs as well as grow revenue, right? And saving costs here and being able to move money around the globe way cheaper and then put that into products and things like that, development, I think that's how you start to get that snowball effect.
Awesome. Okay, we got time for one last question, and because of the nature of the organizations that we've got here, you have to think ahead. You have to think forward. So I'll ask each one of you, what major shift do you think PayFi is going to bring that maybe people aren't quite talking about yet? It's a tricky one, but let's finish on that one. So I'll start with Stuart, and then we'll go down the panel. Sorry to drop you in it first.
No problem. So I think there's two areas here. So first of all, when you're talking with consumers and when you're talking with institutions, you still have to tether yourself to the real world, right? So RWF, real world finance. So you've got to still go through some of that regulatory KYC, KYB process. So I can see a big shift with more regulators adopting, like we have in the UAE with VARA, with ADGM, DIFC, DMCC, really forward-thinking regulators to help the builders build in our industry and our ecosystem. So I think that's number one. I think number two, keeping on the real-world asset tokenization side, I can see a real shift in the SME space. I can see products like invoice financing being tokenized. So if you're an SME and you're on a 60-day payment term, if you put your invoice into a real-world asset tokenization program and you get your cash flow immediately, and then when your payment terms are then fulfilled, I can actually see people taking that up and adopting that. And I won't speak for Worldpay, but I can see large organizations in the acquiring space actually adopting this type of technology to offer to their customers as a value-add service that helps them with their immediate concerns, which is cash flow.
Yeah, I'll just hop on that. Absolutely right. I think that, there's plenty of ways that you're going to see, the technology in this space really grow. And a couple random examples that pop in my head is, say, something like, to me, you have technology now where you can kill certain existing businesses out there, right? Like take subscription businesses. When all of a sudden you could do micropayments and things in quick, fast succession, and now all of a sudden I don't need to have a subscription to something. Maybe I just want to read one article for a tenth of a penny or something, right? That's something you wouldn't be able to do on a card because that's just too small of a transaction, right? Cash flow and funding a lot of these businesses where they know they can get fiat in the form of stable coins, like I said, 24/7, 7 days a week, more than one settlement for the day, right? Like all of a sudden maybe you get 3 settlements throughout the day, and now you've got businesses really pumping and moving and disrupting some of these traditional models, like I said, like the subscriptions, et cetera, like the banks, right? A lot of the FX, which I was mentioning with travel and stuff. So once you start invading in those spaces, they either need to adapt and join the party, or it's going to be a big problem, right? And that's where that consumer demand really affects this.
So I maybe will go to a different segment in the market. So Stuart covered the SME, and you've covered the consumer. I will talk about the commercial, large value commercial payments. It is also a candidate for disruption. They still make up more than 60% of the volumes. They are like significant in the amounts, and also the inefficiencies, or the cost of inefficiencies there is also significant. And this technology, the evolution that we are currently witnessing, has the potential to disrupt this segment. And I believe the business owners now realize those potentials. They can see them on the consumer level processes, and they are started to raising the question, how can we replicate this into our business to unlock hundreds of millions in funds that are locked due to the current way of doing business. This is something that we are working on, and we are creating systems and processes and governance in order to create interoperable bridge between the tokenized world and the traditional financial system. We refer to it as the multi-token network, and I believe it has great potentials in orchestrating and automating large value B2B commercial flows.
Well, that's some alpha from Mastercard. So awesome. So thank you. I want to join us, say thank you to our great panelists. I think we've got some really amazing insights. So thank you guys for joining us. And maybe if you have time, you can join some of our people who have come to the venue. Want to share some more insights with them.
Yeah, thank you, and happy to.